In recent months, financial commentators and analysts have been buzzing about China's actions in global markets, particularly its reduction of U.S. Treasury holdings and increased interest in precious metals like silver. China has historically been one of the largest foreign holders of U.S. government debt, investing hundreds of billions in U.S. Treasuries, because they're traditionally seen as safe and stable. However, data suggests that China's Treasury holdings have been falling sharply, possibly reflecting a strategic decision to diversify its foreign reserves. Some investors believe China is gradually dumping U.S. Treasuries and selling them off while reallocating parts of its foreign reserve towards commodities like silver. This shift may be explained by Beijing's desire to reduce its dependency on U.S. debt, hedge against rising geopolitical tensions, and seek assets that offer protection against inflation and currency risk. Silver, along with gold, has traditionally been considered a store of value and hedge in uncertain economic conditions. China's interest in increasing metal reserves, especially silver, could be tied to tighter global liquidity and fears about currency stability. If China continues to sell significant amounts of U.S. Treasuries, this could have several consequences. U.S. bond prices might fall and yields rise, making borrowing more expensive. The U.S. dollar could weaken, since Treasuries help support dollar demand globally. Other central banks or investors might step in to buy those Treasuries. However, it's important to note that while Treasury sales and silver purchases are trending themes, there's no definitive confirmation that China is rapidly offloading large chunks of here and now, nor that it's doing so with the intent to wage financial warfare. Many economists say China would suffer losses if it dumped U.S. debt too rapidly. Outro. So in summary, China's changing approach to U.S. Treasuries and gold-silver markets reflects a broader strategy of risk management, diversification, and geopolitical positioning. Whether this trend continues remains one of the most important stories to watch in global finance.